Welcome, listener. We are jumping straight into a really fascinating development in the Indian stock market today.
Yeah, it's quite something.
For what is now, let's see, 7 sessions in a row, as of today, April 23rd, 2025, both the Sensex and the Nifty 50 have just been on a roll.
That's right. And we've seen some pretty significant milestones being reclaimed.
Like the Sensex.
Exactly. The Sensex has punched right through the 80,000 level, closed above it for the first time in, 4 months, settled at 80,116.49.
Wow, okay. And the Nifty 50.
Not to be outdone, it also surged, hitting a new high for the year so far, closed at 24,328.95.
It definitely feels like the market has some serious wind in its sails right now. So what's actually powering this impressive climb?
Well, there are a few key things.
We've got a stack of recent reports here, so let's try and unpack the main drivers behind this rally.
Okay, well, a primary factor really has been the strong and consistent inflows from foreign institutional investors, FIIs.
Right, the FII money. That's always significant.
Absolutely. They've pumped in I think it's over $1 billion into Indian equities just recently.
$1 billion? Okay.
Right.
And why now?
Well, a couple of reasons. First, a weaker U.S. dollar makes investing in emerging markets like India, relatively less expensive for them.
Uh-huh. More bang for their buck, sort of?
Kinda, yeah. And you combine that with India's stable economic growth prospects that suggests, the potential for good returns down the line.
Right.
So India just looks like a pretty compelling place to put money right now for those big investors.
That makes perfect sense. Growth plus a favorable exchange rate. Now, another area that seems to be really buzzing is the IT sector. What's going on there?
The IT sector has definitely been a major contributor, no doubt. We've seen really strong fourth quarter earnings from some of the big names.
Okay.
And just generally, there's a positive feeling around tech stocks globally right now.
All right, that helps. Any specific examples?
Yeah, take HCL Tech. Their stock jumped pretty significantly, around 7.7%, after they reported an 8.1% increase in profit compared to last year.
Okay, 7.7% is quite a jump. What drove that profit increase?
It seems to be largely thanks to some massive new deal wins. We're talking worth 25,500 crore.
Wow, 25,500 crore. That's a serious chunk of business.
Oh, yeah.
Suggests a good pipeline.
Exactly. It points to strong future business. And it wasn't just HCL Tech either.
No. Who else?
Well, Tech Mahindra and Infosys also saw pretty substantial gains in their stock prices, both up over 4%.
Okay.
So as a result, the Nifty IT index, the one that tracks IT companies, it was a top performer, surging nearly 4% overall.
So it really looks like the tech sector is firing on all cylinders at the moment. What about other parts of the market? I think I saw mentions of the auto industry too.
Yes, absolutely. The auto sector has also seen some pretty strong buying interest. Tata Motors, in particular, saw its stock price climb by over 2.5%.
So positive sentiment there as well.
It indicates that, towards the auto industry generally, and maybe Tata Motors' specific performance.
Okay, so we've got international investors pouring money in, a thriving IT sector, a strong showing from auto.
Yeah.
Are there any broader global economic factors playing a role here?
Definitely. Several global factors seem to be contributing to this positive mood.
Like what?
Firstly, there's this growing optimism maybe about a potential easing of trade tensions. Between the U.S. and China.
Ah, right. That old chestnut.
Yeah. Comments from U.S. leaders have hinted at possible reductions in tariffs, and the market usually sees that as a positive for, global trade and economic growth.
That would certainly help reduce some uncertainty, wouldn't it?
Yeah.
What else on the global stage?
Well, the weaker U.S. dollar, which we touched on earlier, that continues to be a key factor making emerging markets like India more attractive.
Right.
The dollar's been generally on a downward trend since February. And there was also a recent temporary delay. The U.S. was going to impose tariffs on certain Indian goods, but they delayed it. That provided some short-term relief, boosted confidence a bit.
I see. So a mix of positive signals globally, sort of adding to the momentum. Now let's bring it back home. What about domestic economic indicators? Are they also helping this rally?
Yes, there are some encouraging signs within the Indian economy itself. The HSBC Flash India Composite PMI, the Purchasing Managers Index.
Right, the PMI. How's that looking?
It actually climbed to 60.0 in April. That's up from 59.5 in March.
And 60 is pretty good, right? Anything over 50 means expansion?
Exactly. And 60 signifies a really strong pace of combined growth in manufacturing and services. It's actually the fastest pace we've seen since August.
Okay, so the underlying economic activity looks robust.
It suggests that, yes. Plus, Finance Minister Nirmala Sitharaman made a recent statement talking about the government's aim to boost the manufacturing sector's share of the economy, up to 23% over the next couple of decades.
A long-term goal.
Yes, but the market often sees those kinds of long-term positive signals as encouraging for investment now.
It sounds like quite a confluence then. Both international and domestic factors sort of pushing the market upwards. Now let's think about what this all means for the market in general. That Sensex crossing back above 80,000. That feels like a significant marker after 4 months below it.
It absolutely is. Reclaiming that 80,000 level, it's a strong sign. Suggests positive market sentiment, maybe a potential shift towards a more sustained upward trend.
Right, it signals optimism.
Yeah, that investors, on average, are feeling more positive about the future prospects of Indian companies, the economy.
And I've noticed, looking at the details, there seems to be some movement happening between different sectors. Some are flying high, others seem to be taking a bit of a breather.
That's a keen observation, yeah. While IT and auto are currently leading the charge, we're also seeing what's called profit booking in other areas.
Profit booking meaning selling to lock in gains.
Exactly. Investors who've made good money are selling some holdings to realize those profits. We've seen this happening in banking, for example. Stocks like HDFC Bank, Axis Bank, Kotak Mahindra saw some declines recently.
Okay, so banking's cooling off a bit. Anywhere else?
Yeah, sectors like consumer durables, oil and gas, PSUs, public sector undertakings, and telecom have also seen some selling pressure.
So it's this sectoral rotation we hear about.
Precisely. It's a normal part of a dynamic market. Investors shift their focus, their capital, to areas they think have more potential right now. It's like they're saying, okay, made good gains here, let's take some profit and look elsewhere.
Right, hunting for the next wave. Now, with this sustained rally, 7 days straight, are we starting to see any technical indicators flashing warnings? Like, is the market getting a little overenthusiastic, maybe?
That's a very important question to consider right now. And yes, some technical indicators do suggest the market might be approaching what's known as overbought territory.
Overbought. Okay, like what?
Well, one common indicator is the relative strength index, the RSI.
Ah, yes, the RSI.
The RSI for the Nifty 50 is currently around 67, 68. For the Sensex, it's about 68.
And what's the threshold for overbought? Usually, isn't it 70?
Generally, yeah. A reading above 70 often suggests an asset might be, well, maybe overvalued in the short term and could be due for a correction or a pause.
So we're close.
Getting close on the main indices. Interestingly, the Nifty Bank Index RSI, that's already higher. It's in the 73, 74 range.
Oh, okay. So banking specifically looks more overbought.
It indicates a stronger likelihood of overbought conditions, specifically within that sector, yes.
Right.
Think of it like a rubber band. When it gets stretched really far.
It might snap back a bit.
Exactly, it might snap back.
That's a helpful analogy. So what could be the consequences then? If we are in or near this overbought zone, should we be expecting a pullback?
Well, overbought conditions often increase the possibility, yes. Either of a short-term correction where prices dip, or maybe a period of consolidation where the market just kind of trades sideways for a bit, takes a breather.
Okay. Are there levels people should watch if there's a pullback? Support levels.
Yeah, analysts often point to key levels. On the downside, for potential support, maybe around 23,300 for the Nifty 50, and perhaps 76,500 for the Sensex. Those are rough figures to keep an eye on.
Got it.
But, and this is crucial, despite these technical signals hinting at caution, the strong buying we're seeing from institutions, especially those FIIs.
Right, the $1 billion.
Yeah, exactly. That flow of money is currently helping to maintain the upward momentum. It's propping things up.
So it's kind of a balancing act, isn't it? Technical saying, be careful, but the actual money flow saying, still going up.
That sums it up pretty well. A bit of tension there.
Now, let's bring this right down to a personal level for our listeners. How does all this market action potentially impact the retail investors, someone managing their own investments?
Yeah, good question. For retail investors, this rally, well, it can present opportunities for gains, obviously, especially if you happen to hold stocks in those sectors doing well right now, like IT and auto. We've also heard reports, some smaller cap stocks seeing big price jumps, hitting their upper circuits. That can be exciting if you're in them.
But there's a but, isn't there?
There usually is. As the market, and especially certain sectors like banking, approach those overbought levels we talked about, it's really important to exercise caution.
Why specifically?
Because there's a higher chance of profit booking by the bigger players, the institutions. And when they sell, it can lead to temporary, sometimes sharp drops in stock prices.
Okay, so maybe don't chase the rally too hard right now.
It might be a good time for you, the listener, to maybe review your investment portfolio. Think about your personal risk tolerance. Are you comfortable with the level of risk you're taking given where the market is?
Right, a portfolio checkup might be in order. Good point.
Yeah.
What else should retail investors be thinking about during this kind of strong market phase?
Well, while the upward momentum is, encouraging, it's really vital to stick to the fundamentals of investing.
The basic.
Yeah, the basics. Remember why you invested in specific companies in the first place. Look at their underlying financial health, their long-term prospects. Don't get completely swept away just by the market's upward trend.
Easier said than done sometimes.
True. Also, pay attention to those sectoral rotations we discussed. Understanding where the money seems to be flowing and where it's flowing out of can help you make more informed decisions about your own holdings.
That's sound advice. It's not just about the Sensex number, but what's happening underneath. And what about those technical indicators, like the RSI? Should individual investors be obsessing over those?
Probably not obsessing. While technical indicators like RSI can offer some insights into market sentiment, maybe show extremes,
Yeah.
it's generally best for most retail investors to use them as just one piece of the puzzle. Use them alongside your fundamental analysis, alongside your own long-term goals.
So don't trade just based on the RSI hitting 70.
Definitely not. Don't rely solely on those indicators to make buy or sell decisions. Market sentiment can be fickle, and these indicators can give false signals sometimes.
Understood. Okay, so to try and bring this all together, maybe give our listeners some clear takeaways from this whole market rally situation. What are the key points retail investors should really keep front of mind?
Okay, let's summarize. Firstly, the Sensex and Nifty have seen substantial gains. They've hit multi-month highs, year-to-date highs. That shows strong positive momentum right now.
Chuck.
Second, the IT sector is really leading the charge, and that's largely driven by strong earnings from the big players like HCL Tech, Infosys, Tech Mahindra.
Got it. IT strong.
Third, interestingly, the banking sector, after its own recent run-up, is seeing some profit booking, so some cooling off there.
Okay, banking caution.
Fourth, a really significant support for this whole rally is the continued positive outlook, and crucially, the investment coming in from foreign institutional investors, the FIIs.
FII is still buying.
Yeah. And finally, those global economic factors, things like potentially easing trade tensions, a slightly weaker US dollar, they're also playing a supportive role in the background.
Okay, those are the main factors driving things. So based on all that, what should retail investors actually do? What's the practical advice?
I'd say the most important thing is to stay informed and be vigilant. Keep aware.
Vigilant.
Yeah. While this rally is positive, you need to be aware of that potential for overbought conditions, the possibility of short-term corrections. Don't ignore those signals.
Okay.
Keep an eye on company earnings as they come out, watch global economic news, and yes, maybe glance at those technical indicators, but always put them in the context of your own long-term investment strategy.
Don't let the short-term noise derail the long-term plan.
Exactly. And finally, it's almost always a good idea, especially in volatile times, to consider having a well-diversified portfolio. Don't put all your eggs in one sector's basket. Diversification helps manage risk.
Excellent summary. Okay, so there you have it, our deep dive into the factors driving this recent, quite exciting rally in the Sensex and Nifty, the broader implications for the market, and importantly, what it could mean for you as a retail investor.
It's certainly been eventful.
This sustained upward movement, well, it presents exciting possibilities, no doubt. But as always, a well-informed perspective, a thoughtful, balanced approach. Those are your best tools for navigating the market.
Absolutely. Stay grounded.
We really hope this discussion has given you some valuable insights today. What are your thoughts on this rally? Which sectors are you keeping a close watch on now? We definitely encourage you to continue exploring these trends, maybe revisit your own financial picture in light of these developments. Thanks for tuning in.